Imagine waking up one morning and realizing that your paycheck is no longer the only reason you can pay your bills. Your rent or mortgage is covered before you even clock in for work. Your investments quietly earn money while you're sitting in meetings. A digital product sells while you're asleep. Dividends arrive without you lifting a finger. That isn't a fantasy reserved for millionaires or social media influencers. It's the reality that thousands of ordinary Americans are building one income stream at a time. The biggest financial mistake most people make isn't earning too little. It's depending on just one source of income. If your employer decides to cut jobs tomorrow, your entire financial life could change overnight. But what if losing your job simply meant one stream stopped while several others kept flowing? In today's video, we're going to break down exactly how you can build multiple passive income streams while working a full-time job, even if you're busy, even if you're starting with limited money, and even if you've never invested before. The first thing to understand is that passive income doesn't actually mean making money without doing any work. That's one of the biggest myths on the internet. Almost every passive income stream requires effort up front before it begins producing income consistently. Think of it like planting a tree. You spend time preparing the soil, planting the seed, watering it, and taking care of it. For a while, nothing seems to happen. But eventually, the tree starts producing fruit year after year with much less effort. Passive income works exactly the same way. Your goal isn't to avoid work. Your goal is to perform work once and get paid repeatedly instead of trading every single hour for a paycheck. Most Americans spend 40 or more hours every week working for active income. The problem is that active income stops the moment you stop working. Passive income changes that equation by separating your earnings from your time. That's why financially successful people often have several different income streams instead of relying on one employer. They understand that diversification isn't just for investments, it's also for income. The more independent streams you have, the more stable your financial future becomes. Before creating additional income streams, you need to strengthen your financial foundation. If you're carrying high-interest credit card debt at 25% APR, paying that down often provides a better guaranteed return than many investments. You should also build an emergency fund that covers at least 3 to 6 months of essential expenses. This safety net prevents you from selling investments or abandoning long-term plans whenever an unexpected expense appears. Once that foundation is in place, every extra dollar you save can begin working for you instead of sitting idle. One of the easiest passive income streams for full-time workers is investing in low-cost index funds through a brokerage account or your employer-sponsored 401(k). Instead of trying to pick individual stocks, index funds spread your money across hundreds or even thousands of companies. Historically, the U.S. stock market has rewarded patient investors over long periods despite short-term volatility. By contributing consistently every payday, you're using dollar cost averaging to buy investments through both good markets and bad. Over time, dividends can be automatically reinvested, allowing compound growth to accelerate your wealth without requiring daily attention. If your employer offers a 401(k) match, that's one opportunity you should rarely ignore. Imagine someone offering to double part of your investment simply because you participated. That's essentially what many employer matches provide. Not taking advantage of it can mean leaving free money on the table. Depending on your situation, contributing to a Roth IRA or traditional IRA may also provide valuable tax advantages. Understanding IRS contribution limits and choosing the right retirement accounts can significantly improve your long-term financial results. Dividend investing is another strategy many people use to build passive income. Certain established companies distribute a portion of their profits directly to shareholders through regular dividend payments. While dividends alone won't make most beginners financially independent overnight, consistently reinvesting them can create a powerful snowball effect. As your portfolio grows, those dividends purchase additional shares, which then generate even more dividends. Over many years, this cycle becomes increasingly powerful. Real estate has created wealth for generations, but today's investors have more options than ever before. Owning rental properties can generate monthly cash flow, but being a landlord requires responsibility, maintenance, and management. If you don't want to deal with tenants, real estate investment trusts, commonly known as REITs, Allow investors to gain exposure to income-producing real estate without purchasing entire properties themselves. REITs trade similarly to stocks, making them accessible even for people with smaller investment budgets. Digital products represent another excellent opportunity because they can continue selling long after they're created. Imagine spending several weekends creating an online course, designing printable templates, writing an ebook, or building spreadsheets that solve common financial or business problems. Once those products are published on established online marketplaces, customers can continue purchasing them without requiring you to recreate them each time. While updates may occasionally be necessary, the same product can generate income repeatedly. Affiliate marketing is another growing source of passive income when done correctly. Instead of promoting random products simply for commissions, successful creators build trust by recommending tools and services they genuinely believe provide value. Whether it's financial software, budgeting apps, investing platforms, or educational resources, affiliate income grows when your audience trusts your recommendations. Building that trust takes time, but once your content ranks on search engines or YouTube, it can continue attracting viewers and generating commissions for years. Speaking of YouTube, creating evergreen content has become one of the most powerful modern passive income opportunities. Videos answering timeless financial questions can continue receiving views month after month. Advertising revenue, affiliate partnerships, sponsorships, and digital product sales can all work together from a single video. Of course, creating quality content consistently requires effort in the beginning, but once a library of evergreen videos exists, older content often continues producing income alongside new uploads. If writing feels more natural than recording videos, starting a niche website or blog may be another path. Articles optimized for search engines can attract readers searching for answers every day. A single well-written article explaining retirement planning, credit scores, investing basics, or tax strategies may continue receiving traffic for years. That traffic can generate advertising revenue, affiliate commissions, or digital product sales long after the article is published. Many people underestimate licensing opportunities. Photographers license images, musicians license music, graphic designers license templates, software developers license applications. Even simple design assets or presentation templates can continue earning royalties after they're uploaded to digital marketplaces. The Internet has dramatically expanded opportunities for creators to earn recurring income from intellectual property rather than only client work. Automation is what transforms side projects into scalable passive income streams. Modern technology allows recurring investments to happen automatically through scheduled transfers. Online stores process payments automatically. Email marketing systems deliver content automatically. Customer support can often be partially automated through knowledge bases and AI-powered assistants. The more repetitive tasks you automate responsibly, the more time you free up to build additional income sources instead of constantly maintaining existing ones. Time management becomes especially important when you're balancing a full-time career with building passive income. Many successful people don't suddenly find extra hours in the day. They intentionally create them. Watching less television, reducing social media scrolling, waking up an hour earlier, or dedicating a few evenings each week to long-term projects can produce remarkable results over several years. Consistency almost always beats intensity. Working on a project for one focused hour every day is usually more sustainable than trying to work 12 hours every Saturday before burning out. One common mistake beginners make is trying to build 5 passive income streams simultaneously. That approach usually leads to unfinished projects and frustration. Instead, focus your energy on building one reliable stream until it begins generating consistent results. Then use part of that income to help fund the next opportunity. Over time, each stream supports the growth of another. This gradual stacking approach creates momentum while reducing unnecessary stress. Risk management should always remain part of your strategy. No passive income stream is guaranteed forever. Companies can reduce dividends. Real estate markets fluctuate. Online platforms change their algorithms. Interest rates move. Consumer preferences evolve. Diversification helps reduce the impact of any single setback. Just as investors spread money across different assets, passive income builders spread earnings across different sources. Taxes are another important consideration. Different income streams receive different tax treatment, and understanding the rules can save significant money over time. Interest income, qualified dividends, capital gains, rental income, business income, and retirement withdrawals may all have different tax implications. Maintaining organized records throughout the year makes tax season far less stressful. Consulting a qualified CPA or tax professional becomes increasingly valuable as your income streams expand. Your credit profile also plays a role in future opportunities. Maintaining a strong FICO score by paying bills on time, keeping credit utilization low, and avoiding unnecessary debt can improve your ability to qualify for favorable mortgage rates, business financing, or investment opportunities later. Good credit doesn't directly create passive income, but it often opens doors that would otherwise remain closed. Perhaps the most valuable investment isn't a stock, a property, or even a business. It's your financial education. The more you understand investing, taxes, personal finance, business, and technology, the more opportunities you'll recognize. Skills compound just like money. Every book you read, every course you complete, and every lesson you apply increases your ability to create future income streams. Remember that building wealth is rarely dramatic. Social media often highlights overnight success stories while ignoring the years of consistent effort behind them. Most financially independent people didn't wake up rich after discovering one magical investment. They patiently built systems, reinvested profits, controlled expenses, avoided lifestyle inflation, and allowed time to work in their favor. The power of compounding doesn't only apply to money, it applies to habits as well. Imagine yourself 5 years from today. Instead of relying on one paycheck, perhaps you receive dividend income every quarter, rental income every month, digital product sales every week, YouTube revenue every day, and investment growth quietly happening in the background. None of those streams alone may replace your salary at first, but together they can fundamentally change your financial life. That's the true goal, not chasing quick riches, but creating freedom, flexibility, and resilience. So if there's one message to remember from today's video, it's this. Don't wait until you have more money, more time, or the perfect opportunity. Start with the resources you have today. Open the investment account. Contribute to your 401k. Create your first digital product, publish your first video, write your first article, invest consistently. Learn continuously, build patiently. Every major financial success story begins with a single decision followed by thousands of small, consistent actions. Years from now, you'll either look back wishing you had started today, or you'll be grateful that you did. The choice begins with the next step you take after this video ends.